Welcome to Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Julie Hyman. Here's what we're watching today. First up, OpenAI is in talks to raise $10 billion from Amazon. We'll have more on that report and what Amazon seeks to gain from that deal. Plus, as Micron prepares to deliver its earnings after the bell, we'll break down the true cost of the artificial intelligence build-out. And oil prices rebound after President Trump issues a complete blockade of sanctioned tankers in Venezuela. We'll dig into what the latest moves mean for the global energy market. First, let's get a check-in. Let's get a check-in on stock futures here this morning. We are seeing indications for a higher open across the board, albeit a modest one here. Right now, the Nasdaq is leading those early gains. Nasdaq 100 futures pointing to a gain of about 1/3%. Well, Amazon is reportedly in talks with OpenAI about investing more than $10 billion in the company. The deal would value OpenAI at more than $500 billion and include the use of Amazon's chips. We're also following breaking news this morning. Oracle's Michigan data center is in limbo after Blue Owl funding talks stalled. That's according to the Financial Times. So, talking about all of this, joining me now is Mandeep Singh, Bloomberg Intelligence analyst, Yang Wang, Counterpoint Research senior research analyst, and markets and data editor Jared Blikre. Mandeep, I want to go to you first, and I actually want to start with this latest Oracle headline having to do with Blue Owl. Again, this is a report from the Financial Times, which is also saying that Blackstone had been in talks to potentially step in to provide funding. Is Oracle just sort of the weak link in this data center build-out and generative AI build-out story, or is there more to it than that?
I would attribute that more to, OpenAI not being able to ramp up their revenue in the timelines they have given, for the $200 billion revenue by 2030. And that's where everything sort of is linked. If OpenAI doesn't get to that level of revenue, then how do they pay for the compute that Oracle is trying to build with the data center capacity that they are adding? So I think a lot of the concern is because Oracle is over-indexed to OpenAI when it comes to their backlog. And if OpenAI doesn't have the leading model or it can't ramp up revenues at the same pace that it had given 6 months back, then that limits their ability to buy the compute that Oracle will build.
And so what does that imply then about that other story I mentioned this morning, which is the Amazon OpenAI talks? OpenAI in talks to use Amazon chips as part of that. I mean, how seriously? In other words, if the revenue ramp up is throwing some of Oracle's data center build out into question, doesn't it throw everything into question?
Well, in the case of Amazon, the goal is very clear because Anthropic has now really pivoted towards Google TPUs in terms of using TPUs for both training and inferencing workloads. I think that puts into question the whole Amazon-Anthropic relationship. And I think Amazon is really looking to diversify that by bringing OpenAI to their platform and potentially having them use their Trainium chips. But to my mind, the ecosystems were a lot cleaner before: NVIDIA, Microsoft, OpenAI, and then Anthropic working with Alphabet and Amazon. And now things seem to be shifting, and that's where Anthropic moving to Google TPUs is what's probably led Amazon to invest $10 billion in OpenAI.
And Mandeep, what does this imply about this entire trade going into next year? If it's getting more complicated, if there are going to be increasing questions about the ability to fund all of this, what does that then mean for how these stocks do?
I mean, look, everyone still believes that generative AI is transformational. Instead of winner-take-all LLM approach, I think now everyone is believing that there will be 4 or 5 companies that will have frontier models, and they will be neck and neck in terms of competition and features and functionality. And that's where, if you're over-indexed to OpenAI as a supplier, you're reconsidering that and really looking to partner with all 4 or 5 of them because, whether it's Gemini or Anthropic Claude or XAI Grok, maybe Meta may release a new model that's very close as well. That's where these 4 or 5 companies all have leading models now, and they will continue to ramp up.
Well, there's something else I want to talk to the panel about, and that is Micron coming out with its earnings after the close of trading today. Revenue is only expected to climb by 16%, but of course the outlook here is that Micron is also heavily indexed to AI. It provides those high bandwidth memory chips. Jared, what are we seeing in terms of the recent AI trading here, especially among the semiconductors?
Yeah, well, let's go to the Wi-Fi Interactive here, and I'm just going to show you the sector action since that high that we had, or actually there we go, the high that we had on October 29th. So this was the tech-led sell-off, and not surprisingly, tech has done the worst, and semiconductors and Micron were a leading part of that sell-off, and here you can see healthcare was the best performing. And then, since the bottom that we found on November 20th, tech is kind of in the middle of the pack, so it hasn't even been driving the sell-off as much as other parts of the market, like XLY, that's consumer discretionary, that's a Tesla story, then finance, materials. So let's just drill into the semiconductor space and see who's been outperforming since that November 20th bottom. What you're going to notice is the two big ones, NVIDIA and Broadcom, have not participated. They're just slightly down right now. And then here's Micron. I just circled it, and I'm going to pull this up. You can see it's up 15.5%. Here's the year-to-date chart. Now, it's up 176%, and I'm going to put this in context so you can see how it stacks up versus the entire semiconductor sector. This is the SOX that I'm measuring it to. So up here at top, 176%, that's Micron. Down here, that's the iShares Semi ETF, the SOXX. And you can see that Micron is simply a high beta play on the entire semiconductor industry, which is fine, but you just got to know what you're getting here. It's basically the semiconductors plus leverage. And then if you take further a look at the software versus the semiconductors, year to date, you can see they were neck and neck, but they diverged about 3 months ago. And here I'm zooming in on that 3-month time frame, and you can see semiconductors have managed to stay positive, and they've held on to gains of about 14.5%. Meanwhile, software has sunk 5%. So it's been a game of have and have-nots, but this is a bull market, and we see different leadership emerging at different times. Rotation, the lifeblood of these bull markets. So to answer your question, what's been happening with Micron? They've seen elevated daily ranges recently, about 5.5% per day over the trailing quarter. The options market is pricing in an 8.5% move after earnings, so we might see a larger move tomorrow, but that's what we know right now. And as long as semiconductors seem to be outperforming, we might expect Micron to be leading that pack.
And let's talk a little bit about Micron going into the numbers, because the stock's it's done well this year, very well, but it's been selling off into the report.
Yeah, so let's just go back to our heat map here in the Wi-Fi Interactive. I'm going to pull up Micron one more time. So this was a year-to-date that I was just showing. Let's just show the 3-year, because this really puts things in context. Micron had been stuck in a range for quite some time and only recently broke out. So this is kind of a new trading paradigm for anybody who's been trading this breakout. A lot of times when stocks are trading range-bound, when they're going sideways, they'll have a different flavor. They'll trade in a different way. So this is kind of a new Micron that we're experiencing here. So traders who are trading this over the last few earnings announcements might notice something a little bit different this time.
Yeah, we shall see. Thanks, Jared. Let's talk about the sort of ripple effect of the AI build out and in sort of Micron being a case study, so to speak. And Yang, you know a lot about this because we have seen memory chip prices go through the roof because a lot of memory is sort of being dedicated and diverted to the AI build out now. You guys have been doing research on that. So what effect has that been having?
Well, I mean, first of all, I mean, we will be looking very closely at the Micron earnings, especially because they've announced recently that they'll be winding down the crucial business unit which caters to consumer electronics segment, and smartphones will be the first to get hit. Now, zooming out a bit, when we look at the key memory components such as DRAM, prices have gone up 70% in this quarter, and we're projecting it to go up another 40% next quarter. So what that directly means is that the build cost or bill of materials for smartphones, they have already increased 20 to 30% for the lower end devices below $200. But even think of the flagship devices from Apple, from Samsung, even those prices will be going up 10 to 15%. Now, what is the compounding effect, right? It means that costs are going up, and then companies have to make a tough decision. Will they bite the bullet and take the additional cost, or will they choose, which in our opinion is the likely case, pass through the cost to consumers? And in an environment where prices are high, inflation isn't really coming down yet, it's going to be a tough decision for consumers whether they're going to upgrade or whether they're going to postpone. And in our understanding through our consumer surveys, they're very likely to postpone, and that means it leads to our latest forecast that the smartphone shipments for the global market next year is going to be coming down 2.1%, and that is a big delta from what has happened in this year, which the market grew 3%. So a swing of 5% is going to be painful for all industry players in the smartphone industry.
Yang, when's the last time there was a decline in shipments year over year?
Well, I mean, the last time we had a big decline was in 2022, 23, when obviously on the onset of the Ukraine war, you had inflation and central banks hiking rates. So, of course, that, there was also the compounded effect of a massive amount of pent-up demand working from home. So there was a lot of device refreshes ahead of it. So entering into that cycle, you had a lot of supply chain pains, but on the demand side, it cratered. So luckily, and in looking at what's going to plan out next year, we see demand remaining fairly resilient, and that's mainly because the trading environment has been fairly stable. I mean, the growth engines, emerging markets, you look at big markets like India, Southeast Asia, they're still on a growth trajectory. The US, China, Europe remaining stable. And let's not forget, US, China, the 1 year trade war or tech war truce. And that kind of paves a stable environment for our industry. So thankfully, we're not going to get a demand collapse. But yeah, I mean, who knows what happens in a year's time when we hopefully get out of the memory squeeze cycle, but then geopolitics could rear its ugly tail again.
Yes, most definitely. And who knows also the AI build out, what other kind of knock-on effects it will have. And Mandeep, I want to bring you back to pose that question to you, because we just heard Yang talking about the higher prices of memory chips and the effect that could have on smartphones. But I'm also curious for the AI build out itself. Are we going to see price volatility in all of the things needed to go into that build out? And have the major players really ensured their supply, or are we going to see a lot of volatility there as well?
Yeah, I mean, you could see, supply shortages in certain components at a given point of time. But to my mind, the build out is more or less, certain in the sense like that 3 trillion number in aggregate spending through 2030 does sound very plausible given what we have seen in terms of the intent around AI investments and, frankly speaking, the ROI that people are seeing when it comes to the generative AI use cases, whether it's coding agents or customer service. So from that perspective, the build out will take place. It's just a question of whether, the neoclouds aren't able to raise funding at a given point of time because of concerns around excessive leverage, or, there could be some component shortages, which is why CoreWeave had to push out its data center going live last quarter. So all those are part of the build out, but there is no doubt that, companies are committed when it comes to deploying AI, and they do need the compute, which is pretty much a requirement when it comes to doing inferencing on these large language models.
Yeah, most definitely feels that way. Mandeep, Yang, Jared, thank you guys so much. Appreciate it. And coming up on Morning Brief, we're going to bring you today's top trending tickers and count you down to the opening bell. Welcome back The Morning Brief presented by Robinhood. Now time for some of today's trending tickers. We're watching Warner Brothers, Tesla, and Medline. First up, Warner Brothers. The studio is urging its shareholders to reject Paramount Skydance's $108 billion bid for the company. Warner Brothers says the Paramount offer is inferior and inadequate. It said all of this in a letter. Its board of directors raised several concerns about the Paramount offer, including its uncertain financing and the risk of terminating the deal. Netflix shares, by the way, are gaining on this. Paramount shares down about 2%, WBD off more than 1%. Next, Tesla. The EV maker is facing a sales halt in California if it doesn't change its marketing practices. California's Motor Vehicle Department alleges that Tesla misleads consumers about its driver assistant technology. The agency is giving Tesla 90 days to appeal or come into compliance. Otherwise, the company's sales license would be suspended for 30 days. California is both Tesla's biggest sales market in the U.S. and home to one of Tesla's largest factories. A little bit of context as well. The stock closed at a record yesterday, so coming off a little bit from those highs. And finally, Medline, the medical supplies company, will begin trading today in the year's largest IPO. It sold 216 million shares Tuesday for $29 each, and the pricing gives the company a market value of about $39 billion. The IPO raised $6.2 billion from Medline. The deal is also the biggest majority private equity-backed IPO. The backers include a long list, but they include Blackstone, Carlyle, and Hellman and Friedman. Well, we've been watching a lot of AI headlines this morning. Among other things, Amazon's reportedly in talks with OpenAI to invest $10 billion. OpenAI would maybe use Amazon chips. And Oracle's experiencing a funding speed bump with a data center build-out in Michigan that was supposed to be funded by Blue Owl. That's according to the Financial Times. Let's talk about all of this and kind of the sentiment in the market around AI. Michael Reinking is with us, NYSE senior market strategist. Mike, obviously there's been a volatile element that has come into the AI sentiment here.
Absolutely.
A lot of it is centered around Oracle and sort of funding of these projects, private credit and its involvement in all of this. Like, what are your thoughts on this?
Yeah, I mean, we've definitely seen some concern building, kind of within the markets, just in terms of the amount of capex that is being committed. Kind of Oracle and the OpenAI kind of side of things is really where kind of that concern has kind of resided, and you've started to see kind of like an OpenAI complex and a Google complex kind of start to form within the marketplace, right? And you're kind of with the Gemini model coming, kind of bursting onto the scene, and then the Google TPUs, right? You've started to see, some rotation even within, kind of the AI complex. But the fracturing of the AI story in some ways is driving, kind of broader rotations, kind of within the marketplace, right? So AI has been such a big driver of U.S. market performance over the last couple of years. You've had these, kind of fits and starts of, kind of rotational activity, right? And now you're once again kind of seeing one of those. We'll see if it can continue, as we move into 2026.
Yeah, I mean, I think that's really the big question, right? I've seen sort of an increase in at least rhetoric and talk about diversification, about hedging. People not saying sell all your AI stuff, but like maybe buy some other stuff also.
Yeah, and I think that that's that makes some sense, right? The difficulty in U.S. markets is just that there's so much concentration at the top end of the indices, right? So it's very hard not only to kind of avoid, kind of the AI stocks, but that AI theme has, kind of really broadened out, beyond just technology, right? It's now very much driving performance in utilities and industrials, right? So you've seen even that just the AI factor is such a big driver, kind of in U.S. markets. But, if you look at kind of the overarching backdrop, kind of outside of AI, right? You have a reasonably positive, kind of backdrop heading into 2026. You have kind of reasonably supportive monetary policy, some fiscal, supportive fiscal policy, right? And then the setup is kind of similar to what we had coming into 2025, where you have earnings expectations are looking for kind of mid double-digit kind of return profiles for kind of small, mid, and large caps, right? So it almost once again kind of becomes a prove it story for those small and mid cap companies. This year we did see small caps kind of hold the earnings estimates kind of going throughout the year. Mid caps didn't quite do that, but it's that prove it story. Can you deliver, right, that earnings growth profile that markets are looking for? which will help kind of continue to drive some of that rotational activity.
And how much of all of this is contingent upon the Fed cutting in January, for example?
Oh, I think the expectations for a Fed cut in January are pretty low, right? But I think it's the idea, right, that you have a central bank that is going to kind of remain supportive on the dovish side of things. Maybe kind of 2 cuts, kind of through the remainder, 2, 3 cuts through next year. And then you also, there's a lot of argument about what they did in terms of balance sheet management, but that is injecting some liquidity back into the system. So for risk assets, right, that does tend to kind of put a bid underneath the market.
Does it feel like there's a Santa Claus rally coming at this point?
It's a little bit dicey, right? We are kind of turning that corner where we're in that final 2 weeks of the year, where kind of the seasonals do get pretty positive, right? It seemed like yesterday we finally had kind of the tech stocks, which had been under pressure, seemed to find their footing a little bit. This morning's story kind of once again kind of undercuts kind of some of that, and it is it becomes harder for kind of the S&P 500 if you don't have supportive tech kind of into the back half of the year, into the final 2 weeks of the year. But in general, right, I think that the backdrop is pretty positive. The one I think there's 2 things that I have caution around, right? A, sentiment, and kind of positioning. If you look at kind of the Bank of America survey that was out yesterday,
it was super bullish.
right. So that's a little bit concerning. And then if you kind of look at kind of the 4-year presidential cycle, and typically kind of midterm election year does tend to be the worst year of that 4. So that does give you a little bit of pause. But if you think back to kind of how a lot of the seasonals have played out kind of throughout this year, they haven't necessarily kind of gone true to form. So.
All right, well, we'll see what happens then. Thanks, Mike.
Thanks for having me.
Good to see you. Coming up on Yahoo Finance is Opening Bid. Executive Editor Brian Sozzi joining us now. Soz, what's coming up today?
We're going to talk stocks, Julie. I'm so psyched. Stocks, I know, right? Go figure. But more specifically, AI stocks. Going to talk some transports. And then I am totally jazzed about this latest in the saga between Warner Brothers, Paramount, Netflix. Julie, I can't get enough of seeing rich, powerful media executives fight over a prized asset. I love this stuff. It's like TV, Julie.
It's very fun to watch when one is not involved. It's true.
That is correct.
Yeah.
Yes.
Thanks a lot, Soz. Looking forward to it. That does it for Morning Brief presented by Robinhood. We got much more ahead. Sozzi's got you next.